Institutional traders will buy at levels that most traders would put their stop loss a tick under the last lows, and they will invariably put their stop loss at exactly where the institutional orders are. Does this make sense to you? If you want to become a really profitable trader, then make sure you stick to the end to understand how this trick works. And to answer you most asked questions, it would work on Forex, crypto, stocks, and even bonds if done right. Okay traders, we are currently on the Euro-British pounds. Now remember, we are trying to take advantage of the areas where institutional traders take their trades, thereby taking trades at areas of stop loss. These are areas where most traders are likely to put their stop loss. Now, watch very carefully as we execute trades using the strategy, as this would achieve a very high profitable win rate. For this strategy to work, we need to use one of the most useless indicators out there. Now, I am not saying that the indicator can't be profitable or useful when trading. What I am saying is that, unless you really know what you are doing, that's when you could probably make anything out of this indicator. Now the indicator being referred to here is the parabolic SAR. Why I regard this to be among the useless indicators out there is because it made me the highest loss when I first started out trading, back then in 2008. Now let's quickly add the parabolic SAR to the chart. To do that, bring up the indicator panel. I want you to search for the parabolic SAR. This one right here by TradingView. Now how does this indicator work? For a buy signal, when you get the parabolic SAR below the candlestick, you take a long trade. When you open trade, you place your stop loss at the recent swing low, then take profit at any multiples of risk factor. And for the sell, it's just the opposite of the buy. You enter trade when you get the parabolic SAR above the candlestick. And to set your stop loss, most traders would set stop loss at the recent swing high. Now taking trades like this would drown any trading account you use, no matter how much capital you invest. So for the strategy we would be using, let's first adjust the settings for this indicator. Now bring up the indicator settings. On the input, I want you to adjust the start option to 0.002. Also do the same for the increment. And that's all we have to do here. Now let's move over to the style. Change this to white for better visualization. When you are done, click on the OK button to fully apply the setting. Now we can notice it gives more valid entries for long and short trades. But do not get too comfortable with these traders, as this is not how we would be taking trades. We can see over here that it made some losing trades as well. So do not use this indicator just by taking buy and sell trades. Now enough of the long talks. How exactly do we use this strategy? Now watch closely as we take trades using this strategy. According to institutional traders, they take trades at the point of stop loss, where points of stop loss is likely to be where they open orders. How does that work? It also boils down to the time frame being used. Normally, I hate trading the 1 hour time frame because to get really profitable trading, avoid doing what most traders do. Now I am not saying if you trade the 1 hour time frame that you wouldn't be profitable. What I am trying to let you know is that it is the chart where most traders analyze the market. Remember, we are on the hunt at taking trades at levels of stop loss. This is a lot of information being given out for free. So before we move on, please smash the like button as it takes only 5 seconds to do. Then if you are new to the channel, hit on the subscribe button as it motivates us on the hunt for the Holy Grail. Okay traders, on the 1 hour time frame, we would want to see a new signal from the parabolic SAR. So we just got a new sell signal from the parabolic SAR. Novice traders who just started out would have placed a sell signal at the point, then their level of stop loss would be at the recent swing high. So to be profitable on the market, what we do is this. We would first identify points of stop loss and mark those areas. We mean recent swing highs from the point we got our signal. Now the highest level of swing high tends to be this point. We would be placing a level of resistance here. We would also identify the lowest level of swing high close to the point from which we got our signal. And we could notice it was at this point. Identifying levels of higher swing high is easier, as it is just to mark the highest point where price reached before its reversal. But getting a lower swing high tends to be a little bit difficult, as sometimes you tend to get 3 swing highs that are close to the point we got our signal. Now the lower swing high tends to be at this point, and we would have to mark the area. Now this would serve as our resistance levels. Now remember, why we mark these areas is because they tend to serve as stop loss for most traders, as this market move that generated this signal on the parabolic SAR would also do the same to many other indicators. Now we would want to see the price test this level before we look to take sell trades. But before that, we are not yet done with the modification. To take trades, we would have to use a new unique time frame that has less usage by traders. And it's no other than the 10-minute time frame, as it would work perfectly okay when combining it with the 1-hour time frame. So let's switch over to the 10 minutes time frame. Now in the 10 minutes time frame, we would be adding a very good indicator that identifies areas of order block in the market. To add the indicator, bring up the indicator panel. I want you to search for the Order Block Finder Experimental. This one right here by Wogamlo. Now for this indicator, we would only be using it at its default settings. An application with this indicator for this strategy would be working only on the 10 minutes time frame. Now what we look out for is for us to get price action to retest this area of resistance. Let's now go back to the 1-hour time frame, as we would also want to be able to identify when new parabolic SAR occurs. So let's hide this order block finder, as it would not be of any use on the 1-hour time frame. And we see that price has already reached the level of previous swing highs, the level in which most traders placed stop loss. And you can see that if you were on this trade, by taking the parabolic sell signal, you would have been stopped out. So back to our strategy. We see we want the price to touch the resistance area, which we got at this point. Now notice we got a new buy signal from the parabolic indicator. So we would also be identifying the levels of stop losses most traders are likely to take if they were to enter this trade. So if we took a trade at this point, our level of stop loss would be at the recent swing low. Now from the point of entry signal, the most recent swing low is at this level. Now let's change its color to green. Now to identify the support area, we would check the most higher level of swing low. So price moved down at this point and also retraced before further move downwards. Then this is another swing low level. But the lows of this are lower than the previous swing low. So we would be placing our level at the lows of this swing low area. This would now serve as our area of support. Whenever we have price trade at this level, we would then hunt for a buy entry at the 10-minute time frame. So what we are currently looking out for is a sell trade entry, as price has retested our level of stop loss. These are areas where the big banks and institutional traders take their trade. Now let's move down to the 10 minutes time frame and take trades. So how do we take trades? Let's make the order block finder visible to enable you identify what you need to do to enter trades. Now looking at the order block finder, we can see that the order block indicator gives the bullish order block areas, which identifies areas in which traders take buy trades, also the bearish order block, which identifies areas where traders take sell trades. Now how we take trade with this indicator is simple. We would want to wait for a new bearish order block finder to enable us to take new profitable trade at institutional levels. Now we got a new bullish order block at this point. But we would not take any trades at this level, as what we need is a bearish order block. Now this shows that some traders who trade the breakout are taking entry positions to go long. But that's not the case for us. And we see we got our bearish order block, as this would tell us that traders are taking trades as well at these points to go short. So what do? We now take the position to go short. So we would take trades at the lows of this candlestick. Stop loss at the highs of this bearish order block. Then to set a profit level, 2 times the risk is a good risk to reward ratio. Please don't be greedy traders. You can use up to 3 times your risk factor to take profit, but I think 2 times the risk is a reasonable take profit rule, as we want to get in and get out before the market becomes messy. Now before you take the trade, let's check the 1-hour time frame to be sure we are on the right track. Now in the 1-hour time frame, we could notice that the price broke above our resistance level. Now when price breaks above the resistance level, what does price do? Now, it either prices keep moving up or it reverses back down to form a fake breakout. Now note that when price is broken above the resistance level, we get a signal from the 10 minutes chart. Make sure your level of take profit is not below the levels of resistance, as it could tend to be a new support level, as price would likely bounce back up after the retest. So make sure that if you are to keep the trade, your profit level should be within the range it would not hit the resistance level. Please note that we are still on the hunt for our buy entry. And if price moves towards this support level, we would have to hunt for the buy trade. Let's see how our sell trade would perform. Now back to the 10-minute time frame. So we see it was successful. Now we can see we have fulfilled this order. Let's keep an eye out for our buy signal. Now notice price movement towards this resistance level. So make sure that when you enter trade as price breaks above the resistance level, that your entries and take profit is within the points where it would not interfere with market conditions. So we can see we got another entry for a sell trade at this point. So let's get rid of the previous resistance levels and place our new swing highs. As if you were to enter trade at the parabolic signal, stop losses would be at these points. This serves as the highest swing high, and this serves as the lowest swing high from the point we got our signal. Now this serves as our new resistance area. Moving on. So we see the price has tested the support area. And this support area was created at the point traders would place their stop loss, as the parabolic long signal would provide these levels for stop loss. And by price retesting this level would stop most traders with open trades. And this is the point where institutional traders hunt for long positions. And how do we do that? Just like we said earlier, we would hunt for those within the 10 minutes time frame. Now in the 10 minutes time frame, let's activate the order block finder. We won't take trades at bearish order blocks. We need to have a new bullish order block. Please also note that we would be looking out on the 1-hour time frame to identify when we get a new buy signal from the parabolic SAR. And if we get a new buy signal, we would have to cancel the hunt for this previous buy signal and work with the recent condition present. So we can see we got a new parabolic SAR signal to go long. And also, we can notice we got price action retesting our marked resistance level. So at this point, we would hunt for a sell order at the 10 minutes time frame, as well as creating a new order for a buy condition, as the previous support levels tend to be invalid. So if traders take a long position at this candlestick, stop loss would have been at this level of swing low. The lowest level tends to be at this point, and higher swing low level at this point. Now these levels would serve as our new support areas. Let's now hunt for our sell entry at the lower time frame. Please note that this strategy would work best at a ranging market and have a low profit factor at a trending market. And now in the 10-minute time frame, we would want to get a new bearish order block before we enter trade. So we got a new order block for a bearish trade at this point. And at this point, we would have to place a sell stop order at the lows of this trigger candlestick. Stop loss at the higher bearish order level. And for the profit, always remember to keep greed aside, work with 2 times the risk applied. And as always, before we move on with the trade, always check the higher time frame to be sure we are safer with the entry. You can turn off the order block whenever you are on the 1-hour time frame, as it is not applicable on this time frame. Now, notice that on the higher time frame, our take profit level is below the levels of recent support. And these are levels where price is likely to bounce back upward. Now what I do in this situation is this: if price should go in our favor and hits this support level, then we would have to adjust the stop loss level for a break-even trade. Now notice that price hit our take profit even before we had to adjust our stop loss. This is no luck, it is just the institutional traders closing out a lot of stop-loss levels, so consider yourself to be smart enough by using this strategy, as it keeps you in the right direction of the market. Now we have fulfilled this order, let's get rid of these resistance lines. Again, notice we got a new sell order from the parabolic SAR. And you already know what to do if you have been following us from the beginning. So we have to identify our new resistance area. Also remember that we are on the hunt for a new buy signal, as price has retested our area of support, which was the stop loss for this parabolic buy signal for most traders. Let's now hunt for our buy entry on the 10-minute time frame. Let's make the order block visible. And we would want to see a new bullish order block before we enter trade. Now we have a new order block at this point. So this is where we take our buy stop order. Stop loss and profit levels remain the same. And as always, before you take the trade, check your higher time frame. So we see that price action is still at the levels of our support area. And we would want to see the price move back up. And we see it was successful. If you noticed, all winning trades had something in common. Institutional traders pushing price in the direction of what we entered. So make sure you take this strategy seriously if you really want to be profitable. And that's it for today's video. Thanks for watching and see you in the next one.